All right, good afternoon, everyone. Hope you are well. This is Friday evening. Wanted to drop a new video for you guys to start off the new year. New indicator, and you guys probably have heard about this one. It's called Average True Range Indicator. So I'm going to explain two setups to, or two indicators for you today. Number one, the ATR that you can see at the bottom of my screen here. I have an ATR, and also let me shrink it. There we go. All right, so you have the ATR here, and I'm going to explain what that is. And you can see this blue line I'm highlighting on my screen here. That is what we call ATR trailing stop. All right, so let's go ahead and explain these indicators. The first thing you're going to do is you're going to go to your trend spider, and you can find this inside TradingView, StockCharts.com. Most common charting tools already have this indicator, but TrendSpider is pretty easy for me to use. So number one, we're going to use the average true range indicator. You just got to type it in the search button, search bar here, average true indicator. I'm going to use the length of 14, which is simple moving average 14 average true indicator. Average true range. And I'm going to use an ATR trailing stop, a multiplier by 3, and I'll explain what that is, and length of 14, all right, which is, again, 14 moving averages or 14 candles, okay? Whether I'm looking at a daily chart or a 5-minute candle chart, and therefore looking at 14 candles. All right. Now, one thing about moving averages, okay, we use moving averages or SMA, EMA, unless you're looking at minute charts, okay, they generally do not factor in gap ups in pre-market and after hours. Okay. The unique thing about ATR, average true range, is that it considers all gaps. Okay, so what it does, it takes a whole entire range of trading days of last 14 candles. If I'm looking at the, for example, here, let's just look at, for example, October 1st and before. It looks at all these 14 candles up to about right here. It adds up all the ranges divided by 14. So therefore we have an average true range, and it includes all the gap ups or the gap downs, like this gap down here, this gap up here, or even little gaps like this one here, depending on how far we go back. Now, what the average true indicator, average true range, ATR, it is not a measurement of any sort of the direction of the stock. It tells you the direction of the volatility. The lower the volatility, the better opportunity it generally is time to buy. The higher volatility generally means to us better times to what? Sell or short. Okay. So if we look at the average true range on the daily basis, and we'll just start with the QQQ here, I'm going to scroll back all the way to May 2021, right? No, actually right around here. Okay. You can see that the average true range got down to about $3.60 right here. All right, so I'm just going to draw a line for you guys and kind of demonstrate what's going on here. So the average true range is about $3.40. This is what we call a very low volatility, okay, which generally means that it can, not always, you're going to have use other indicators to track, potential movements like moving averages, et cetera, and all the things I've taught you guys, or BBKC, squeeze, or TTM channels. But what this tells you, that it may be an area where there's a lot of buying going on, okay? That as the lower the ATR means the volatility is gone, and therefore traders will generally go in long positions at low ATR. So here, between July and almost September of 2021, we saw that there was a very low volatility within these candles. Okay, so basically every day the QQQ during that time traded on average about $3.40. Okay, per day on average. Okay, and then once it hit this new low here, right about here, or actually right here, okay, we saw that average true range is down to $3.40. Yes, the stock dropped, okay. However, we saw that the average true range from this point forward, the volatility increased until it exploded. The QQQ exploded over to $400 from around this area here. Okay, so right between here, what we had a low volatility. It could be lower volumes as well. We'll have to look at the volume indicator. But what this tells us, there's low volatility, which means the markets are, could be pretty calm. Okay, yes, there were dips all the way down to about right here, September 24th. We saw that finally it took a big dip here, but you can see the volatility started rising. Okay, why? At this time, because there was such a massive dips, the volatility increases, the ATR increases, right? So now at this low, it is trading at $5.76 in terms of average true range. So we know that this there's a severe volatility in around this area, right? All right, and finally, right here, the bottom. Let's see, October 13th. Then the stock started to rise, and the average true range started to go down. So this could be a good indicator as well when to jump into potential positions. Again, this does not tell you the direction of the price. You still have to look at candles and read candles and look at charts, but this is telling you the volatility is going down. Therefore, right, all of a sudden people are jumping into the trade because the range is getting narrower. Therefore, people are buying it up more because the volatility is lower. What you don't want to do is obviously right here at the peak of, let's say right about here, around this range here, between the last several weeks in December, the volatility was extremely high here. Okay, we were trading on roughly $8.03 in terms of the volatility or ATR. Okay, so I'll just kind of draw a little mark here. All right, and we can see that the prices really started to drop because of the ATR. Was the volatility in the market for QQQ was extreme. Okay, the highest that it's ever been since March 10th of 2021, if you remember that. All right, so here we can see that ATR goes down. All right, and now ATR is coming back. All right, now we're trading. Now we're kind of rising again on the daily here at $7.13 on the daily ATR, which still means that there is significant volatility. Now, this is also the fun part of trading, right? We like volatility. One way or another, we can capture some moves, right? But what this is starting to tell you, if you look at this high in March 2021, when we met an ATR of $8, this thing fell. Okay. Now, again, this doesn't mean that the prices are going to drop. It just means that, hey, maybe the markets are going to calm down a little bit. The trading ranges starting maybe from this day into next week or the next couple of weeks, we may see the volatility in the markets come down a little bit. All right. If it comes down to around this area, $4, then it could mean that it is a good time to buy. All right, or is a good time to maybe the thetas, okay, or the deltas on the options might be much lower, or even the IV. Okay, so I wanted to show that to you guys. Now, if we go onto the 10-minute chart here. All right. How do you measure? How do you read this on a 10-minute chart? We've talked about this on the daily chart. And let's move over to the minute charts here. Okay. So we started this day. QQQ jumped up to on a 10-minute chart. So you can see the volatility rising. Okay. The volatility is now, it's about midday here. You can see the volatility is now down to $1 range. Okay. Which means that finally QQQ is consolidating. All right. Now that it's consolidating with higher lows, it looks like on a 5-minute chart, at least I'm looking at the 5-minute chart as well right now, the volatility has gone down. This is usually the good times to buy calls and short. Okay. So that's how you kind of read this. Now, before I talk about the average trailing stop, let's go ahead and look at the Lucid. All right. If you can look at Lucid, volatility going down, volatility going up, volatility going down, and boom, volatility is coming back up again. So you may see that Lucid will start to maybe sell off a little bit towards the end of the day or into next week if the momentum isn't there. But we can see that Lucid, back when it hit $60, the volatility, ATR during the day peaked at $7.82. So that's a huge trading range for a stock that is about $40 at that time. Let's just say, for example, it was $10 at that time. When we hit about, let's say right here at on January 25th, 2021, we hit a price of $27. The average true range on that day, January 25th, was $2.03. $2.03 is about for a $25 stock is about 10% volatility, right? That's pretty significant. If a stock trading at $100 jumps $5, that's a 5% volatility. ATR here was over 10%. So you can see that these are times when high volatility or high ATR, you have to be careful because you have to take profits or else you're going to get stopped out. So that leads me to the next topic, and I'll go there in a second. I just want to show you guys more examples of this. Let's go over to Tesla, for example. All right, Tesla, you can see that the volatility is still rising on the daily. Okay, it's now trading within what I mean, $56. I'm sorry, right here we are here about $63. Let's see, trying to $63.21 ATR. That means on a daily basis, on average, it can trade between $63. That roughly represents about 5 to 6% of the stock price. So pretty high volatility there. Is this a good time to go long? Then the ATR would suggest no, because right, we're facing significant volatility. Certainly, there are ways that we can just flip calls and puts during the day. So if you looked at the 10-minute chart since on this Friday for the for Tesla here, you can see the volatility rising. Right, prices tanking. And each candle is getting bigger in terms of the range, right? So this is, and if you see something like this, this means that hey, volatility goes up, price going down, you be short, right? And then once the volatility calms down, then it might be time for calls. I hope you guys are getting this. Okay. All right. Let's go over to let's pick another one. Let's say let's just go ahead and look at SPY. Okay. All right, we can see SPY, the ATR is coming down, all right, at least on a daily basis. So this can also, not all the time, but, again, this doesn't measure the direction of where the price is going, just the volatility. Lower volatility certainly means more buyers, in my opinion, right? And higher volatility means more sellers, right? So we can see on the 10-minute chart, there's consolidation. There's no question about that. You can just look at the candles, it's trading within range, it's consolidating. The market's trying to decide what to do. The ATR is going down. Therefore, you might see a bigger move towards the end of the day. Now, if you look at SPY on this little, this huge run here, all right, let's just say right here, it hit a low volatility of $3.70. And the volatility continued to rise, and you can see the price starts moving up as well. Look at this. True range right here. I'll show you this right here. From this period to this period, okay? And look at this, right? And you have the stock price, right, on the move. So therefore, we have what? A bullish divergence, okay? All right, so let's go back. Let's go here. Look at when the massive dips took place on SPY down to 432 back in October. Range way up, all right? Volatility way up, okay? Finally, it came down a little bit here, and then now we're back on the rise. So, so as far as where SPY is going, let's just take a look at back into March 10th, 2021. Same thing like Q. Back in March, it reached a peak of $6.58. All right, $6.55, and then it peaked. It's also peaking here. So does this mean it's time that the markets start pulling back? Not necessarily, because we know that this is not a good indicator for price direction, but the volatility should start to subside. And potentially, if this volatility goes down, then there should be more buyers, because therefore, right, the volatility IVs, all right, and the call options and the put options might be much cheaper and even more profitable because you have lower IV. All right, so I hope that makes sense for you guys. All right, so now let's go ahead, and I'm just going to pull up QQQ once again. I mentioned earlier at the beginning of this video the average true range trailing stop. Okay, it is also based on 14 MA. All right, and what this does, it's an automatic calculation of the average true range multiplied by 3. Okay, what does that mean? So what it's telling you, all right, let's say for example here, if you entered QQQ back in, let's say, October 14th, and you bought shares, and maybe you bought long calls, okay? What this average true range here is that this average true range, whatever it is, it's multiplied by 3, and it places a line below the prices to tell you when you should be exiting your calls, when you should be taking profit. Okay, so you can see that the volatility, I mean, ATR goes down, this goes up, sharp rises in prices, and it's a nice way, a cheat sheet to help you know when to get out of those trades if you're in a long position on a daily basis here. Now, when should you potentially start shorting? Right here. All right. You can see that this average true range was very spot on December 28th. It hit the average true range trailing stop here, and everybody went short. Okay. So pretty interesting tool here. This can also act as a form of support. You can see back on November 23rd, 24th, 25th, and the 30th, this acted as some level of support, and then it rose through. Okay. And finally here. Now, if you're looking at this daily chart, okay, this is a pretty rough range to hold, right? You couldn't just rely solely on this trailing stop to sell. But let's just say you caught this little ride up here from the MA 100, jumped up, there you go. That's your selling point. If we got into, let's say, QQQ calls, and assuming we're bullish for the next several weeks, yeah, we're going to sell at 401. This is where the ATR trailing stop is. Now, since the price is dropping below the ATR trailing stop, you can see that there's significant selling pressure as well. Now, what do we do on the 5-minute chart? Because right now we're very accustomed to buying and selling calls and puts on QQQ, right? It's fun, right? Okay, so let's just take a look at what happened this morning. ATR, all right, trailing stop was right here. That meant that if you were in calls, that would be a stop. Okay, if you were short, you should have been there. There was a little bit of support here. You should have been selling here from up here. Okay, some of you guys caught that. Congratulations. I did. Unfortunately, I did not call this one out. However, I caught that one. Okay, now on this way down here, all right, you can see the ATR trailing stop is going across, okay, which means that there's just consolidation. If you were in a call, you would probably put a stop at 379.14. So it's like a nice little tool, right, to tell you when to actually stop your calls. If you are in puts, this is also telling you that is a support as well. Okay, let's go over to, for example, let's talk about Lucid right now. All right, and I know Lucid is running up right now on the 5 minutes, taking a dip from $43. Okay, so this is a trailing stop here. If you're in, let's say, calls, you need to be selling here. If you are, well, you should have gone short. If this breaks, you see this candle here on the 5-minute, it broke the average true range trailing stop, therefore you would go short. Okay, so this makes a very clear, somewhat of a clear signal of when to go long or when to go bullish on the 5-minute, or when to go short on the 5-minute chart using this average trailing stop indicator here. If it holds, call. If it breaks, then you put. Okay, so let's go back to QQQ. All right, we can see for the most part, QQQ right now is going flat. So this is an area, right? This is sideways movement. So you can see this is complete sideways movement. Therefore, ATR trailing stop is just going flat. Okay, so there's nothing to. This is an area where, hey, if you are just flipping for pennies, go for it, and you could do so by price action. However, it's not telling you much in terms of, okay, where you should actually be placing calls and puts. However, you can see, at least on a 5-minute chart, the volatility on QQQ right now is significantly down from the highs of the day. Now, on the daily side, just be careful. The volatility, there is still significant volatility going into next week for QQQ. All right. So with that being said, I hope this video was useful for you guys. And please let me know how you guys like it, and please incorporate into your charts. I know there are a ton of indicators out there, but this one shouldn't be used on its own. You should also rely on simple moving averages, EMA ripster clouds that we've done, and tutorials we've done in the past. All right. So with that being said, I hope you guys have a fantastic